Welcome to TradeTheMBI.com. This is John. This report is for the 10th of August. Well, we got a little bit of weakness the other day, and that was not surprising. We'd already seen the breakdown starting with the magenta below gold. The issue was the white MBI reading at, well, now only at 4. Not quite enough to suggest that we're going to see a break of support at this particular stage. We are starting to see the potential leveling off of the gold rise. That's been enough to keep things in the perpetual lift that we've been seeing from the original buy signal that came back over with the magenta conversion and the blue rising above the gray. And it's been pretty consistent all the way through. A pivot back up or a reset would certainly create the next leg up of theoretically, an ABC move. Already here, A, B, C, and then we could redo the same thing. Still not seeing a whole lot of short activity. In fact, fading below DOC red. So all the indications are that we're still just in a modest basing. Of course, the NQ looking pretty identical, a little bit stronger move from the white. And that's just because it's been the leader in this whole run in the first place and it's really led the way. From a Euro standpoint, again, it's just trapped right in between this range. We can see now that some of the sanction changes, of course, now all of a sudden Ukraine got paid with the banking snafu, so to speak, and they're going to allow Russian oil to flow through one of their pipelines that goes through their territory. So these little changes that we talked about a week or so ago are starting to play in, and that could alleviate a lot of the strain that the EU is suffering. I would definitely bolster the euro in that sense. From a gold standpoint, just no reason to expect it to do anything but to continue its ascent. We're going to see obviously some back and forth within that, but it's already way undervalued relative to what we've been seeing. And the drop in oil as a result of some of these small details, both conservation, lower consumption, still too close to that 90 level. If you get down towards the 75 or in that mid-range, I think that you could see a real strong improvement everywhere, because it's a huge drain on capital with the extra energy costs, and it just sucks out of the economy. And of course, our expectation is that treasuries or yields going to continue to rise as it becomes clear that the Fed is not going to be switching to quantitative easing anytime soon, and that will force TLT down, treasury yields up. Bitcoin, was great. We marked the positive extreme setup as this little tick off started to happen. We had previous unfilled from, well, this one had been filled by that setup right there, and then we started the new run. But we filled it all the way back in and then proceeded to continue to decline with that red MBI leading. So yes, fine, you had the orange, magenta over yellow and rising. So there's going to be some type of an upswing, but when that red leads, it's just a matter of that pivot starting to take place, and then of course getting a secondary pivot right underneath the 25 is usually death nail, and in fact led to the complete drop back to the 22 range. But nice turnaround move, buying back up just a little bit. From a ES5K, we had some just nice action. We started off with the decline. We had a couple of these little ones, but again, we had the red lead, and where we saw that periodically throughout the day, it always led to some degree of sell-off. It was just a matter of waiting for the weight to pop through. Then you can expect your 0%, and in this particular case, what happened here, that's exactly what we got. In fact, a break of the lows. And then it was just back and forth, but the ranges were still quite nice. You're going from the 30s down to the 13 range. More than enough points to be picked up, and the fact that it was just back and forth with it made it nice and easy. And you can see even in pre-market, we were down back to that same low area before this strong buyback, just putting us right between the same algo levels that we've been looking at. So all in all, the action still remains good. Things are seemingly easing on the macro standpoint, which is both bullish and yet counter to the narrative of quantitative easing. So bad news is good news, and good news is also good news. So that's where we're at this particular stage. Is just a lot of corporate buyback money that's still available to be utilized, and that's what we're seeing supporting it. And that may be enough to lift retailers back into the setup. And that would lead to a new breakout if it's able to transpire. So we'll see with the readings how that softness that we're seeing from the daily starts to play itself out. As always, though, trade well. We'll talk again later.